let's look at the next generation of the internet. We will look at Inseego. First off, read this disclaimer carefully and do your good deed of the day by liking and subscribing. I am releasing a bunch of videos now because I will be on a short holiday. So the next generation of the internet theme is under the Megatrends. We have it here. Next gen internet, pretty good outperformance. Inseego is here. I put it under mobile networks. Huge pullback here from the 52-week highs. So definitively being some major haircuts. So let's now look at the company's website. Yeah, accept the cookies. So 5G changes everything. How will it help you move ahead? So yeah, they have a big exposure to this 5G revolution, I guess. Yeah, very nice and informative website. So let's analyze the company. We start with the charts. So this is the long-term picture. You can see that it did, participate big in the dot-com bubble, and it completely crashed. And this is a good illustration of why you always need to manage your positions, because even if you have, a company that's part of like some megatrend, this crash here is, wow. Over 99%, you cannot sit on your hands for a 99% plunge. Even Amazon, which has become, a huge company and all of that, it crashed big time during the dot-com bubble. So yes, always manage your positions. Here you can see the financial crisis, negative for Inseego in a very big way. So what we have formed is this very, very, very beautiful rounding bottom pattern. This is just a classic pattern here in technical analysis, very nice. We have a bit of a pullback. There is a possibility that we're going to form something called a cup and a handle. This then would be part of that handle. So technically this is, it still looks constructive. It frequently has pullbacks and pretty big pullbacks at that. Like this one here as an example, from this high to this low. Yeah, minus 68-ish%. Huge. Okay, so the key thing, the reason why it popped up on my radar is that I looked at this 100-week moving average. It was resistance, but it became support. And we tested it again after this huge haircut. The previous time we had a test, if you take the closing price to this high here, that is 212%. That's pretty decent. Hence, if this works as a bounce level, as a support level, then it is a big deal. And frankly, if this level were to fail, it would be also a very big deal because it has supported the rally ever since 2018. So this is a key level. Looking at RSI, this is where the buyers tend to show up. Strong correlation though with the S&P 500 at 80%. Looking here at the daily data points, you could certainly make a rather strong case that we do have some horizontal support levels. So if we can paint in a bit here, as you can see, here clear support. Yeah, so it looks interesting. From the daily data points as well, you do have that horizontal level. Accumulation distribution is still showing that, there's not that many buyers yet that have shown up. That is unfortunate. Looking at the PPO, it's rare for us to be this far below the 200-day moving average in red. So yeah, if there are bulls out there, then we definitively expect them to show up now, basically. So here is the seasonality of Inseego, and here it gets interesting because March, it's a bad month, and it actually has been a bad month. That seasonality has definitively played out, but you see that April, May, and June are significantly stronger. The average gain is pretty decent. That's a bullish point. Looking here at Finviz, they draw this trend line, boom, support, bounce, bullish. Looking at, the average analyst price target, the stock is currently at $10.14, so they suggest a 19% upside from the current level. That is also a point for the bulls. Okay. Yeah, here we have Saks.com, and you can see that they do have a number for sell. That means that the earnings estimate revisions have been going down. It does have a D-value score, but the A growth score is really good. This is a growth stock, so it's a bit of a mixed message here, but overall it's okay-ish, but could certainly be much better. No dividend, no big surprise there. So basically, if we kind of sum up here, looking here at the long-term picture for Inseego, I do like the theme. The theme is strong next-gen internet, 5G. This is definitively something that is a huge trend. Difficult to become bearish about it. The problem, as we saw in the chart, is that when Inseego goes down, it goes down very, very big. And we are at the key level. The bulls definitively must show up at these levels. If they are out there, they need to start buying yesterday. Okay? So that is what must happen. So it's a very dicey situation here for Inseego, given the track record of this stock. But this is after a major haircut. The fundamentals look good. The seasonality is good. So yeah, looking years into the future, as long as the key levels hold, then I would certainly be bullish. But I think that even years into the future, I would be bullish anyway. Though definitively with the managed stop for sure, given how much it can go down when things get rocky. Looking at the coming weeks and months, I think we need to give this one to the bulls. It's like they have the ball in their court. They have too much in their favor. Hence, we just need to watch. You could also, of course, be a bull and participate. But basically, we expect them to make a play. And the bears, they are definitively going to look very carefully at what the bearish sentiments and points do, to the bulls, because the stars kind of are aligned a bit for them. And the way it works in the market is that if a stock does not rally on a good setup, then that could be interpreted as very, very bearish. Hence, it is they must play. Okay, whatever you do, of course, you want to be market neutral in this market, and the only real way to be market neutral nowadays is to have both long and short positions. So you need to both be a bull and be a bear, because back in the day you could hedge yourself by having a diversified portfolio, but what we have seen in the previous crashes is something called crash correlation, in which gold, bonds, you name it, all the different asset classes, they all of a sudden become highly correlated, even though long term they are not really supposed to. So basically, there's no place to hide except in long short country.